Good afternoon and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. And the Bulls have maintained the control. It has been, again, of course, it's not been a very euphoric session. It's been a lackluster session, slow and steady. It seems like it's the mantra Santo for the Bulls at this point of time. And we have remained in the green territory throughout most parts of the day. Even though during the day there have been instances when we did slip into the red zone. If you look at the Sensex, is sitting at close to lifetime highs now, whereas Nifty 50 is heading for an all-time closing high at the current juncture. We will have to wait and see what, of course, transpires over the next half an hour. If you look at the broader market, there is a little bit of sign of profit booking. If you look at the mid and small cap stocks, they are at this point of time underperforming their large cap peers, clearly indicating some bit of profit booking coming into the market. Apart from that, globally, if you look at it, Barclays has again slashed its growth outlook for the global economy. They are now expecting the global GDP to grow at the rate of about 1.7% from about 2.2% that they had forecasted earlier. So clearly, Santo, the macro is on one side and the Indian market is on another side.
No, definitely. But even if you look at the domestic macros, which I highlighted in the morning show as well, it's that you look at the contraction in October exports. It's the first time it's happening in 2 years. Now, this
also the degrowth in imports as well. I mean, this growth in imports as well has also come down probably.
Exactly. So you're seeing some bit of pain being transmitted through the trade channels, and that is likely to spill over to other sectors also if the same trend continues. CJ, let's not forget that. But that said, at least in the short term, the bull market, the bull run looks intact, and as long as there's money coming in at this rate that we are seeing, probably I don't see any big risk.
You know, Santo, just to add to that, I think the list of skeptics are also growing as we head towards the record highs, because I think Kotak Institutional Equities, of course, Sanjeev Prasad at the helm of that, came out with a note today suggesting that all may not be as rosy as the market is expecting at this point of time, because if you look at incremental signs for the domestic economy, there is clearly signs that at this point of time there is really no incentive for the market to be upgrading earnings expectations heading into FY24. Apart from that, he also touched upon, as Santo has, on the export side of the story, where we are clearly seeing some bit of degrowth happening. So valuations at this point of time are near their peak, if not at their peak, Santo. Market also near their peaks. And during this sort of a juncture, markets tend to sometimes either they get vertigo and they end up falling from those levels, or they get even more bullish and confident. And we'll have to wait and see if the fourth time we end up getting lucky, given that the past 3 times we have failed from near all-time highs.
Well, the presence of skeptics is always a good thing for bull markets. At least that's been my experience
True, absolutely.
over the years, and clearly this has been borne out quite few times as well, and I don't think this time is any different. The risk to a bull market is when everyone on the street turns bullish. That said, a quick check on the F&O market. We are seeing short build-up in futures of Apollo Tyres, Aarti Industries and India Bulls Housing Finance. Long build-up in futures of Hindustan Aeronautics. Well, the defense story is by no means over yet.
Yeah, absolutely. It's the theme of the year. If you did not own defense stocks in 2022, then I don't know what you did in the market.
Balrampur Chini and Dalmia Bharat are the other 2 stocks which are seeing build-up of long positions.
Well, thank you for those F&O cues, Santo, but let's move on to the 5 stocks that were on our radar today, and they were buzzing in trade as well. First off, from the hospital space.
Yes.
Oh, sorry, diagnostic space, I beg your pardon.
Metropolis Healthcare. Now, the stock took a beating today following reports of IT raids on the company. We're still awaiting clarity on that. But if you look at the second quarter numbers also, they weren't anything great to write home about, and that is another reason for the subdued sentiment for the stock. Now, one of the key areas of concerns for analysts tracking the stock is that almost 11% decline, from its west and Mumbai metropolitan region market, which is a key market for Metropolis Healthcare. That's definitely cause of concern. And besides that, the longer term concern which has been playing out for some time now, which is the base effect which has been now that COVID is under control, the kind of revenues that you saw from COVID testing, that is no longer there. Some of the government revenues are also not bringing in as much money as they used to bring in. Besides that, the biggest worry, rising competition in the sector with other players also, other deep pocket and well established players entering the diagnostic segments. So, things not really looking pretty for Metropolis Healthcare at this point in time. The stock had seen a high of 3,500, and now it's down to just about 1,500 odd.
Yeah, Santo, I think it has taken the market really by surprise. This, news emerging of a sudden search operations that have been conducted by the income tax department at several premises of Metropolis Healthcare. So clearly, it's not just restricted to Mumbai. Apart from that, I think at this point of time, clarity remains to be has to emerge with respect to whether the IT department has issues with the company per se, or is it just related to the promoters of the company, and therefore probably the company might be insulated from any sort of wrongdoing if there are any allegedly. That said, I think clearly this is going to create a lot of volatility in the short term. Things were starting to look a little better for Metropolis given the fact that the entirety of this year the stock has been has seen a little bit of selling pressure, largely on the view that earnings probably will lose their momentum in the first half, given that there was the effect of COVID, testing in the year ago quarters and first half of the year. But Santo, if you look at it from a fundamental point of view, and I had recently interviewed their managing director, and she had indicated, Amira Shah had indicated that they're expecting the non-COVID revenue growth that they saw of about 16% on a year-on-year basis. They're expecting that growth momentum to continue. A lot of the new launches that they're doing, the reach out programs that they're doing in smaller towns, semi-urban areas, that have been yielding good results for the company, and therefore they were expecting to double down on that in the second half of FY23 and therefore boost the revenue and earnings momentum in the second half, and that was the expectation that was coming out from the management. But now I think in light of this news flow that has emerged today, it seems that has taken the back seat, and the market is clearly focusing on the very short term at this point of time.
The other point which some of the analysts have also flagged is about the acquisition of high-tech labs,
yes.
which again the margins there will take some time to catch up with the kind of margins that Metropolis Healthcare currently enjoys at this point in time.
So, yeah. True. Good that you mentioned, Santo, the high-tech. I asked the management, because if you look at the margin performance of Metropolis as a consolidated entity, that was actually quite weak. And they attributed largely to the fact that high-tech's product profile is actually of a lower margin profile.
They do the routine testing.
Yes, exactly. They do routine and semi-specialized testing, which does not contain higher margins compared to what Metropolis is used to. And they said that it would be unfair to, at this point in time, look at the margins as a consolidated entity. Instead, I think they are trying to, of course, also improve the margin profile of high tech, but they expect that profile to not be probably as on par with what Metropolis is. So I think that concern clearly is legitimate, that at a consolidated level margins will look quite a little shaky, but if you look at it from a standalone point of view, clearly Metropolis's margin profile is improving and is much better. Well, the first stock, of course, on my radar today is another stock from the banking name that was buzzing in trade and was for the longest time one of the top gainers on the Sensex today, BSE Sensex today, and that was Kotak Mahindra Bank. Now, the stock was actually clearly on reducing concerns around the company's CEO or the next CEO that will come in. Now, let's remember that Uday Kotak, who of course is the founder of the bank and of course has led the bank for so many years, he is going to be stepping down as the chief executive from December 2023, and of course, much like HDFC Bank, when there was such a big legacy, Santo, that you have to take care of, market is always very hawkeye in terms of who they want to come in, what will be the profile of the individual who will be leading the bank next. Now, Bloomberg reported yesterday that Jay Kotak, who is the son of Uday Kotak, he is no longer in the running to become the CEO. That story itself has actually brought a lot of relief to the market, because there were concerns that he could be handed over the CEO role as far as Kotak Bank is concerned. Apart from that, of course, if you take that headwind out of the way, if you look at the recent earnings momentum of Kotak Bank, clearly the return of loan growth for the lender and the aggressiveness now that it is exhibiting in the market, it has been really taken very kindly by investors. And I would not be surprised if this is one of the probably the outperformers in the banking space in 2023, Santo.
Well, definitely, CJ, Kotak has been a little late to catch on to the rally, but now that the numbers also point to good growth for the bank, there's no reason why the gap should not narrow down. And right now, at this point in time, anything with a bank attached to it is in great demand with investors. So clearly, I think very hard to pick holes in your argument at this point, CJ. I'll let it pass. SAIL is the Steel Authority of India is the next stock on my watch list. Again, stock has been under pressure for quite some time now. Now, CJ, if you look at the overall pecking order of the steel industry or steel stocks for that matter, you'll always find that SAIL always figures quite low on the priority of analysts, and the latest quarterly numbers where the company has actually posted a loss, that's not going to endure it to
absolutely.
investors either. Now, the only thing in favor of SAIL at this point in time is that the valuations are reasonable, but against that, when you look at it, you see that the debt has risen quite sharply for SAIL. That is something that is concerning most analysts. Besides that, the company got some relief in terms of easing of coking coal prices. So, what they have contracted in August and September 22, that the impact of that will be felt in the third quarter numbers. But beside that, beyond that, there is still some problem ahead, because spot prices of coal have once again started to move up. So, the cost part of the equation is clearly not under control, and this also comes at a time when overall the demand for steel, domestic demand has been good, but it has been stable, and so have been realizations, and that you also can't export. So, too many restrictions at this point in time, and I think that makes SAIL an underperformer in the near future.
I think, Santo, of course, the key issue with steel companies the past 6 months has been the realization story. After that export duty that was imposed, clearly suddenly the sector became unfavorable for investment to the market. But I think there is still some hope or scope for margin improvement, because if you look at sequential numbers, sequentially there is expectation that costs, of course, would not have run up as they were on a year-on-year basis in the second quarter. So that should clearly aid some of the margins that the company will be reporting in the third quarter. Also, if the government does roll back the export duty, there is some hope building in, given the fact that domestic prices have corrected now about 25% since the time those duties were imposed back in May 2022. If the government does roll back, that will clearly be a trigger for re-rating as far as the entire steel sector is concerned, but also particularly for SAIL. As far as volume growth is concerned, I think, Santo, there should be optimism, because this is now the construction sector season. From October till March, bulk of the projects are generally happening during this point of time. Also, government's own infrastructure projects also start happening. Government spending also starts picking up from November onwards. So there should be good demand or good volume growth as far as SAIL is concerned in the second half of FY23, domestically speaking. But globally, of course, a lot will depend on what happens with China. If we do see a very strong recovery in China in 2023, probably with the COVID, zero COVID policy being relaxed, that of course will be a very, very key trigger as far as the export sales are concerned for SAIL.
Well, again, CJ, that China thing is a little bit mixed, because right now the property sector is in a fairly bad shape, and while the Chinese government has given has extended the deadline for lenders in terms of capping the overall ratio of property loans to about 40%, that's not going to be much of a relief, because property has been one of the underperforming assets for some time now, and it doesn't necessarily mean that there's still a lot of incomplete projects. Developers are in a bad shape, so that's not really going to increase demand for steel, is my take on the matter, CJ.
Well, Santo, the last stock on my radar today is again from the banking space, and this is IndusInd Bank. Of course, one of the second best private sector lender in terms of stock performance in 2022. The stock has given spectacular returns in 2022, and there have been multiple triggers for that. Of course, first being the return of the credit growth for the lender, that has led to a lot of re-rating. Also, you have seen the asset quality also improve. The perception of the bank since same time last year to today has changed, completely. It has taken a 180-degree swing in terms of how the market is perceiving IndusInd Bank's asset quality compared to what it is today. Also, I think going ahead, there is a good possibility that the bank could catch up in terms of valuations to its larger peers like ICICI Bank, even HDFC Bank, as well as SBI. Because if you look at IndusInd Bank's net interest margin, Santo, they are now almost inching towards catching up to ICICI Bank and HDFC Bank, which is a very, very impressive feat given where the lender was almost a year ago. So clearly, the tide has turned in favor of the company, of the lender, and long may it may continue.
Well, yes, no doubt about that, CJ. I think in case of both your picks, it's very hard to argue against them. Similarly, in the case of IndusInd Bank, also there's been a visible improvement in asset quality. That, in fact, was one of the biggest concerns which was holding back investors, and you saw the stock trail some of its larger peers like ICICI Bank, SBI and HDFC Bank. But now with signs of clear improvement on the asset quality front, I think you could finally see the re-rating of the stock happen.
Well, Santo, your last stock?
Is Sun TV, and now this again has been one of the major underperforming stocks in 2022 and looks like it may remain that way. Second quarter numbers again clearly showing signs of pressure because of fall in advertising revenues. Besides that, according to Dolat Capital, one of the key concerns about this company is that it's been under investing in its core broadcast and digital businesses, and despite having a very strong cash position, cash and equivalents are about 5,000 crores. The company has really not been paying out dividends as one would expect it to, and neither is it investing. So what Dolat Capital,
what is it doing with this cash?
So what it has said is that there's a serious fear of capital misallocation, and besides that, Dolat Capital has also said that probably Sun TV could be a suitable takeover candidate.
Possibly, Santo, but I think if I'm not wrong, I think a few months ago, Sun TV's management had indicated, and a lot of analysts also had talked about the fact that one of the reasons probably why, say at least the bulls on Sun TV would say one of the argument given was the fact that they are investing in the movie business though, right? And one of the reasons why that could turn out to be a good strategy is the fact, the recent fad that we are seeing in Southern Indian movies. Now, Southern Indian movies are no longer regional cinema. They have become pan-India cinema, and you can see that in the success of movies from RRR to Kantara. All of these movies, of course, has seen a surge in demand, and Sun TV feels that maybe investing in the movie production business could be one way to ensure growth at a time when the TV business or the broadcasting business itself is facing a lot of intense competition from the likes of Star, from the likes of Zee. Also, ad sales in the broadcasting business have actually suffered in the first half of FY23, largely because FMCG companies at this point of time are still in wait and watch mode in terms of marketing and promotion costs, expenses. So I think, yes, there are a lot of concerns with respect to Sun TV, but if you look at the valuations of the company, I mean, those are almost at distress levels as far as Sun TV is concerned. There is deep value there. Clearly, if you have 5,000 crores of cash on your book, clearly there is deep value, and you can expect that one day or the other, the management will get its strategy right. So there could be a contra play as far as Sun TV is concerned. Also, if we do see ad sales revive in FY23, hopefully as the economic recovery continues, you see FMCG companies also getting more confident about rural growth as well, then given Sun TV's leadership, Santo, in the broadcasting space, they could be among the big beneficiaries. And the one key thing to watch out for me for Sun TV would be how they invest in the OTT business, because they have entered that space, but it seems like that business has lost momentum because, of course, they are facing a lot of competition. Now, to ward off that competition, they need to come out with more original content. Hopefully, the content from the movie production business will also flow through there, but clearly they need some more original ideas as far as the OTT business is concerned to really make it a re-rating candidate going ahead.
Well, and with that, what's on our radar, CJ? Key things to watch out for?
Santo, of course, I talked about it yesterday as well, but clearly today evening you will have the US retail sales as well as manufacturing production data for the month of October coming out. So do keep an eye out on that. Also, investors tomorrow will be tracking the speech from ECB's President Christine Lagarde, so that will be a key event to keep an eye out on. And lastly, of course, EU's inflation data for the month of October, as well as the US building permits data will also come out tomorrow. So keep an eye out on those three events for tomorrow. And today, of course, the US retail sales as well as the manufacturing production data. Shall we take a check of the market, Santo?
Definitely, and at this point in time, market still holding on to its gains, or rather it has again come off a little bit. The Nifty is just flat, just about 1 point up, while Sensex is up by close to about 67 points.
Yeah, it seems like after running a long marathon, Santo, Nifty is faltering just at the home stretch, and there is a lack of momentum in this market at this point of time. It has suddenly dissipated. What seemed like a very, very strong momentum, and we were on course to really take out that all-time record high. It seems like just as we are inching towards the finishing line, probably we are seeing a little bit of fatigue coming into the market. But that said, in terms of sectorally, the outperformers clearly is the Nifty Bank, higher by about 0.3%. The Nifty IT also surprisingly doing quite well. The Nifty IT index is higher by about 0.3%. And lastly, the Nifty in terms of the losers, Nifty Realty Index down about 1% at this point of time in trade, Santo. And let's take a look at some of the queries coming in, Santo. And one of our viewers wanted our thoughts on Aarti Industries. Now, this is a stock from the specialty chemical space, and I think recently there were concerns, of course, with respect to its exposure to the European markets, where apparently regulations have turned adverse for one of the key product that Aarti Industries supplies to producers, global MNCs there, and therefore there is a concern that revenues there could be hit for Aarti Industries. Also, let's not forget, given the export revenues that the company generates from Europe, the recent appreciation that we have seen in the US dollar against the euro and the appreciation that the rupee has seen against the euro has made earnings from there adverse. And I think that is one of the reasons why Aarti Industries, of course, had suffered in the second quarter, and since then has been suffering in terms of stock performance as well. You can see the stock is down today again about 4.2%. So the outlook at this point of time is a little concerning. But if you trust the entire specialty chemicals theme, the fact that Indian players are gaining market share in the export market, I think if you can ignore the near-term pain, the longer-term story still remains very much intact for the company.
Next query, CJ.
I think, Santo, another query was on of course, Visakha Industries. I mean, this is, I think, one of the cigarette players. I'm not so sure if you and I have both looked at this company in detail generally, because it is largely from the small cap space. But
Visakha is actually, Visakha is in the business of manufacturing of cement fiber sheets.
I beg your pardon.
That is VST Industries.
Yes,
I think you got it. VST
yes,
Industries.
I got it wrong. My apologies.
We have not really tracked this company to be able to comment on that.
So, Ashutosh, I think we will get back to you on this probably in our subsequent shows. We can take this up, Santo, as our stock takes, and maybe dwell deeper and see what is happening with the company there. Well,
and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do continue to send in your queries. We'll try our best to answer those.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.